What's going on, family? How we doing? It's your boy Justin Sani. I'm here and really excited to bring you guys a new YouTube video in this new series we're going to be doing. Kind of like an educational breakdown on two different trades that I took this past Thursday. Today is Sunday, the 21st of May. These trades were executed on Thursday, the 18th of May. Trades I posted was like $21,000 plus of profit. This was an intraday trade from London session going into New York. Pretty much both opportunities were. And I wanted to give you guys a breakdown on why the specific area in which we chose to execute. Why was I looking at the market at this specific time? What key points in the market were used for this specific analysis? And really just give you guys a breakdown, understanding of like the walkthrough of what it is that we're seeing as we're looking for opportunities in the market, right? So with that being said, guys, I'm really excited to start these new YouTube series. We've been a little bit behind the scenes working on other things right now. But, I want to come through and start dishing out a lot of free, good, valuable education. So that's what we're going to do. The first thing I want to do is just have a little bit of transparency with you guys when it comes down to it. I know that the skepticism in the industry is super high because a lot of people just, are on some schemey type of time. So what I want to do is I actually want to pull MetaTrader 5 open and show you the trades that I had taken. So if you guys can see down here, we took three different trades, 6,000, 52, 80, 96, 24. That led us to a total profit of $21,254.39. This is a live account trading on Nash markets. You can see the little gold badge there. This isn't a screenshot. This is a full-on interactive chart. I could mark this up, do whatever. But when it comes down to it, I want to break down these specific moves and kind of break down why it is that I look to take those specific trades. But I wanted to give you guys some transparency, just in the sense of skepticism in the space. So that was $21,000 in the day. I remember working at Verizon Wireless, 2016. I used to make like 14, 15K a year, which is insane. I mean, just a little part-time job while I was in college, right? But like, to go back and make more than the annual salary in a day, it's crazy just to see, what potentials are when it comes down to trading. Now, when it comes down to this, family, I just want to kind of go ahead and break down these opportunities. So the first one I'm going to talk about is EURJPY. What I'm going to be doing is I'm going to be using the replay tool just to give you guys the idea and the thought process behind why these specific opportunities, timing wise, things of that nature. Came down to EURJPY. The first thing I was looking at was the perspective of just higher time frames, right? And then since I like trading London into New York, what I like to do is I like to go to the lower time frames, and I'm catching intraday moves compared to swings. The thing I realized within my trading was, I was able to catch one good big swing on the higher time frame a week, right? Maybe have a 20K day or a high 5-figure day or whatever it is, right? But I was able to do that maybe once in a week trading off the higher time frame. But when I took the same model that I was using and the way I was interpreting and seeing the market, when I took that from a higher time frame to a lower time frame and just really started understanding what price was doing and then in the different cycles that it was in, what I started to realize was I can catch the same quality risk to reward opportunity from the higher time frame on the lower time frame, do it in much less time, and still have the same amount of risk, right? And I'll break that down because some of you might say, well, those are big lot sizes. Well, in regards to my account size, I'm only risking 1%. Now, family, factor this in. The first thing I saw was on this specific time frame, we were trending up, right? We've been trending up, we're trending up. So we had these higher highs, higher lows, higher highs, higher lows, higher lows, higher highs, higher lows, highest high, right? So in my perspective, even though it's a micro and a minor time frame, I'm looking at this as a break of structure, right? Now that I'm seeing that as a break of structure to the downside, what I'm going to look for is just key things that are being built up as we come into specific times, right? So in my time zone, London session starts roughly right at 2, right? Asian session ends roughly right at midnight where I live, right? So coming right out of Asian session, we started the little window in between, and then we started going into London, right? Now, my thought process is I see one bearish leg down, right? I saw one bearish move down, right? This move down was roughly 36 pips, give or take, 36 pips down, right? We seen price pull back, made a very good retracement, and came into a very high overbought extreme area of supply. I didn't take any trades here. I didn't see this here, right? But that doesn't necessarily matter. So we see prices coming into this zone right here. We have a nice imbalance below that zone. Price kind of tapped into that already and then started moving away. What it did do is we created a little area that needed to potentially be breached. We got some equal highs right there. And then what we saw price do is we saw price come through and trap, take out the traders trading these equal highs, take them out, and also mitigate. So we had a trap into a mitigation, and then we moved away, right? Now, as we started moving away, what happens again? We have another continuation break of structure, right? We have a continuation break of structure. What is a continuation break of structure? There's weak highs and there's strong highs, and there's weak lows and there's strong lows, right? In a downtrend, this is a weak low, right? So when price breaks that previous low, it's just a continuation, but it does break the structure down, right? There's a difference between breaking structure and shifting momentum or changing directions, right? So now that we've broken structure down once again, we're going into the Asian range. When it comes down to these lower time frame opportunities, there's different ways to play them, right? Now for me, I know that this was a specific point of interest candle that I was looking at. It was from this wick up to this wick here. Some people like to measure body to body. I'm just measuring the whole area because, you know, it's just what I'm comfortable with, right? Now, mind you, on this opportunity, I placed the pending order, right? Now, I placed the pending order. I was thinking maybe going into New York, price would hit my pending order or give me alerts, and then maybe I can get a better entry. But me personally, what I was looking at was I had the stops relatively right above the high. It was like either 149.215 or 149.220. It was 149.215, right? So 149.215, and then you know, I wanted to target the lows. I'm gonna let price play out a little bit. All right, perfect. So boom. So one thing that we did is we broke that structure down, and then we started going up. I'd say we might even have, you know, some internal structure. You know, that broke structure here, went up. I mean, if you were trading this, I mean, this could have been a very nice buy, good risk to reward, and then trading all the way up to this zone. I mean, you know, I live in the USA, so like, you know, in Central Standard Timing. So, you know, London session into New York is a terrible time for me, right? Compared to some of you guys in Europe, you guys have some of the best trading times and best trading conditions to take advantage of, right? Now, for me, if I'm up, you know, there's people that take positions off the open of these candles. There's people that take positions off of the 50% or the equilibrium. I always like to go for the 50, but that's only if I'm awake and I'm actively managing the trades, right? Now, for this case, I was sleeping. I put my pending orders in. I was sleeping, and what ended up happening was price came right on up to the area of interest. It got us in, and then it spiked at the high. Luckily we had our stops 215, right? I have it at 220 here, but luckily we had our stops at 215. Missed the stops. Having a broker with good spread or raw spreads is really important, because sometimes what happens is when you're trading these high RR trades, or you know, if you're trading these specific moves in general, what I want you to understand is that sometimes a broker will hit you out via the spread, even though price doesn't get to your actual stop loss, right? So trading with raw spreads is always super good. But you know, what I wanted to see was price make an extension lower. You know, it would have been nice to get an entry off of the 50, but on this case, we had an entry right off of the open of that specific candle. And then, you know, as it started playing out, it started going down, it started going down, it started going down. Now, I usually wake up to analyze the charts pre-New York. I wake up around 5 a.m. my time, and you know, what I started noticing was right around this time, we had made this push down into this zone here. When I woke up, price had already moved past this area. So let me break that down to you. You know, here was the entry, it moved into New York, it's coming in, whatever, and then it was down here. When I woke up, I saw the charts when it was already pulling back just a little bit, somewhere in this range. I didn't like the fact that we didn't break out of these highs, and I didn't want to get stuck in any traps. I ended up getting out somewhere right around here. It was like roughly 1 to 3, right? 1 to 3, 1 to 4, whatever the case is, right? Now, this isn't a huge opportunity, but the thing is being active and being up, I mean, taking the same opportunity here would have been a much more significant RR. I mean, you know, I guess just being awake at the right time, you could have maximized this. But at the end of the day, catching a nice little 1 to 4, 1 to 3 trade is a good trade. And then, you know, price ended up, I don't even know. Price ended up, I think it ended up breaking higher maybe. Yeah, it did. But at the end of the day, you know, if you know what you're trading and you know what you're looking for and you're very specific and, you know, you don't get greedy and you take what you want in the market, you can have good moves. This is a move where in my sleep, I made $9,000 plus. You know, I'm not saying that to sit here and brag or boast. I'm just saying that, you know, it's a good move. Now, the second opportunity we had was a Euro USD sell. This trade was also roughly in the same area, same level in price. We started on the 15. We saw that the overall price was bearish. We started scaling into specific moves on price. And, you know, on this lower time frame perspective, I said that was the low, that was the high, that was the low, high, low, lower high, you know, that move, this move, that move, right? We had a minor break of structure, came in, put in some equal lows, price pushed up, couldn't break up above these highs, was showing that it was unwilling to go higher, right? We saw signs that price was unwilling to go above this point here. So off of that, we seen price go down. As we start seeing price go down, what we saw was, you know, price taking out these lows. And then we came down to this point here. I thought this is as a significant low because right now, you know, yeah, you could be nitpicking. You could call all the little moves and all the lower time frames and so on and so forth. But this was that last low that really put in these highs. So when I saw these lows kind of getting taken out, what I realized was, okay, well, if price is already doing this, we should look to take it lower, right? Now on this one, what we did was we were looking at this range, and this is, you know, Asia ending, going into London. I marked up this zone here. We took an opportunity off of this price range there. Stop loss was right above these highs. It was right about here. So pushed down, we came back. The stop on this one wasn't too crazy. And then, you know, we started having a nice move, continuation move down. Now, the thing that's unfortunate about this one is I got out early, right? I got out early. One of my TPs was hit. I took 2 positions on this one. One of my TPs was hit. But, you know, I ended up getting out of this bad boy early. You know, sometimes what happens is, you know, you can get psyched out of the trades or whatever. You know, what I realize is that when you're coming into London session, New York session, sometimes if you see a fast move, what it does is it just fakes traders out to, you know, sell more, and then they're scaling in, they're selling, and then they move price the other way. So when I saw this fast move, this was like right as London was opening. We also had this specific candle over here. Perfect. So we have this candle here as well. So, you know, we had a candle where potentially we could reject, potentially we can mitigate off of, whatever the case is. We had our targets here, and then, you know, I mean, this thing ended up really going. I hate when this happens because then, you know, like, you could always hit yourself with the what ifs, you know, like, oh, you know, what if I held it a little bit longer? Oh, what if I did this? You know, so on and so forth. You know, you really can't look at the markets like that. You can't look at it as, you know, I closed my trade. I could have made 40 racks if I would have held my thing. Well, you know, you got to be grateful that, you know, you still made 10, you know. In regards to this one, from, you know, the relative price range where I closed at, this was about a 1 to 5. You know, and when it comes down to it, those are two specific moves that happened on intraday lower time frame, but those are very good risk to reward opportunities. You know, I used to trade on the higher time frames, and I would be waiting for these higher time frame opportunities, and yeah, they were giving me good risk to rewards, but you know, I'd be sitting in these trades for days and days and days and weeks and weeks and weeks. So I like the intraday approach a lot more, trading, you know, London to New York, but I still like to take swings too. But family, you know, I hope you guys enjoyed this video. You know, this is how I made 21,000 plus in the day. I hope you learned something in this one too. Make sure you like, comment, and subscribe. Let me know what you think about the YouTube video. As we start running and gunning and making more, there'll be a little bit of a better structure, and you know, I'm gonna make sure to plan out the content so it can be the max amount of value to you guys. And you know, I appreciate y'all watching. Let me know any feedback you guys have, and we'll see you guys next time. Peace.